Hello, everybody. Thank you for joining us today. My name is Joe Pickart, and I am the chair of Husch Blackwell's tax section. A little background, I've been practicing in tax for a little over 30 years. I would say 99% of my own practice is in tax controversy. I used to do an awful lot of federal tax controversy and appeared in U.S. tax court and the Seventh Circuit and other jurisdictions. About 20 some years ago, I ended up focusing my tax controversy practice on state and local across the U.S. And we have controversies from coast to coast, from north to south as well. And we have with us two other people that I'll introduce you to shortly. But today we're going to talk a little bit about defending against increasingly aggressive federal and state tax audits. Before we begin, I want to cover a few housekeeping items. At the bottom of your audience console, there are multiple application icons for your use during today's program. If you have any questions during the program today, please submit via the question box below. We'll try to answer all of those questions during the actual webcast. But if we don't get to your questions, it has been our practice to get to your questions separately via email. So we'll do that if we run out of time. You should also know a PDF of today's presentation. So the slides we're going through will be made available under the resources folder. I think it's posted there now. This program has been approved for CLE, legal education hours. To report your hours, click on the CEU icon below at the bottom of the screen. A certificate of attendance, including course numbers, will be emailed to you tomorrow, along with a recording of the webcast that you can watch and or share. Toward the end of the program, we'd ask that you complete the short survey. Quite frankly, we've used your feedback in the past to tailor additional programs in the future and make the existing program a little better and more user-friendly. That's all for the housekeeping items that I wanted to go through. So let's get started with the program. Today, in short, with all that has changed in the environment of state and federal tax audits over the last several decades, and more so recently over the last decade, what we want to talk about is how to best position yourself and your company or your client to successfully defend against federal and state tax audits. And we're going to take you from the earlier stages to the later stages in terms of litigation. Although we are not going to focus on the litigation part, we are going to touch upon what you can do to position yourself in the event that litigation is likely forthcoming in the future. As I said, I have two of my colleagues from Husch Blackwell's tax team joining me today. I'm going to have them say a little bit about themselves. So first I'll start with Crystal Cranky, and then Crystal will turn it over to Bob. So Crystal, why don't you share a little bit about your background?
Thanks, Joe. Hi, everyone. My name is Crystal Cranky, and I am a senior state and local tax consultant here at Husch Blackwell. I am also a former Wisconsin Department of Revenue auditor. I was with the state for 8 years and have been practicing in the state and local tax area for over 18 years. Now my practice is consulting with business clients on how to avoid tax violations, and my favorite is helping defend the state and local tax audits. Bob?
Good afternoon, everyone. My name is Bob Romashko. I'm a partner here at Husch Blackwell. Before coming over to Husch, I spent about 6 years working for the IRS in its Chicago field office. It recently discovered, as I appeared in a tax court case, that apparently I appeared in 290 some cases for the IRS. It tried 13 of them. All on the IRS side, of course, there, before coming over to Husch. And today I'll be speaking from both my experiences on the other side of audits and my experiences representing taxpayers on how best to prepare for and defend audits.
Hey, thank you, Bob. Maybe what I'll do is just quickly advance the slide, because I do think it makes sense for contextual purposes to identify, where we want to go today with this presentation. We've already covered the first two. After I go through the agenda itself, Bob will take over on the audit activity. We'll address both federal and state. We're going to talk about audits and appeals, the general procedures, timelines, and other useful information. Obviously, from a state-by-state basis, that can vary, but we're going to give you a couple of items to keep in mind as you address how to successfully defend an audit. We're going to talk a little bit about what we are seeing in the federal and state side and tax audit trends, both substantively and procedurally. And the procedural side is important, procedural/practical side is important because we've seen a shift, and I think sharing some of what we've seen will help better position you guys. We'll end with a kind of a top 10 audit defense best practices discussion. And then, we'll address any unanswered questions and answers towards the end. I do want to mention that on this, the scope of our presentation today, at least on the state and local side, is really geared towards defending audits in the sales and use tax and the franchise and income tax context. That having been said, much of what we are going to talk about translates well to the property tax defense side too. And I was looking through our list of attendees, and I noticed there are many nonprofits attending today, and I suspect you are experiencing part of the trend that's going on nationally, where localities, municipalities, and such are challenging your property tax exemption and therefore the valuation once they determine it's not exempt. Please know that much of what we talk about today translates and transfers very well to that context too. So this will be helpful in that regard as well. If you have any specific property tax questions, please feel free to throw those up on the Q&A, and I'll get to those at the end. So with that, I'm going to turn it over to Bob. Bob, take it away.
Thanks, Joe. So the first thing we want to talk about a little bit is just sort of recent developments in really audit activity and trends there. And if I was speaking at sort of a, very high level perspective, I'd tell you that over the last decade, federal audits have decreased by half. But that's not really descriptive of the current picture here. There's a shift recently in the federal space, and it's twofold. One is there are significant plans to increase the number of tax audits. And two, there are plans to more carefully target audits. So I want to talk just a little bit about that. And the first thing I'd like to point to is just a couple of weeks ago, New York University held its annual tax controversy forum, which always features a heavy presence from the IRS in terms of speakers. And it's a great way to sort of see where tax enforcement is going. And there was, to me at least, a very surprising emphasis on how IRS is ramping up hiring. The commissioner and his staff and enforcement personnel from the chief counsel's office held a roundtable and sort of walked through where they were going. And the drumbeat was really, we are hiring more people, we are going to do more audits, and we are going to collect more revenue. The thing that I found most surprising, to be honest, was the statement that, and we'll talk a little bit about some of the Biden administration's other initiatives in a second, but IRS is already ramping up hiring. They're already interviewing and making offers without the budget to actually pay these people locked in. That's how sure they are that they need more people and that they're going to get them. And this isn't a totally new development either. IRS criminal investigations, and the focus of this program is not on criminal enforcement, but just to give you an example, indicated that they had hired in the last fiscal year about as many new personnel as they had in the prior 5 fiscal years. So pretty significant ramping up of hiring. And there's 2 reasons. One's to increase the number of audits. The other is because and IRS has been upfront about this, you can't simply take people who are doing, audits on earned income tax credit issues, for example, and just shift them over to, high net worth issues. There's a significant amount of training. You need a certain level of expertise. And so they're trying to hire more and more experienced auditors. I next want to talk a little bit about the Biden administration's American Families Plan, which is sort of the rubric under which they've pushed their economic agenda. There is a 20-some page tax compliance plan that they've released in relation to that. And it details their plans for the IRS, really. And the focus there is really heavily on what's called the tax gap, which is the estimate of the amount of taxes that are collected versus the amount of taxes that should be collected. And there's an estimate that there's about a 500 in 2019, the tax gap was about $554 billion. The 10-year estimate projection going forward is about a $7 trillion tax gap. So it's actually about more than 10% of the federal budget every year. And the Biden administration stated a goal to try and close some of that tax gap. They're only targeting about collecting $2 trillion over 10 years by doing so. So they're looking at closing about 30% of that gap. And they intend to do this in 2 ways. One is increased enforcement, hiring more people to conduct more audits, basically. And second is by increasing their tools to select taxpayers for audit, both in terms of new reporting requirements on banks and financial institutions, and in investing in new computers and new software to do a better job of flagging things for audit. The idea being that in 10 years, if you are selected for an audit, it's probably a lot more likely that you owe money than it necessarily is today. And not because not because your practices have changed, but because they're simply trying to do a better job of selecting people for audit where there's likely to be money at issue. More recently with the Senate coming back into session, there's some focus on the bipartisan infrastructure proposal. I just want to note there that the Biden administration's plans to close the tax gap and increase IRS funding to do it are actually one of the pay-fors that are in the bipartisan proposal. So there's at least some enthusiasm for this on both sides of the aisle. And similarly, I also wanted to point out that this is not strictly a Biden administration issue of increasing IRS enforcement or better targeting it. The IRS in 2020 started a new high income initiative, and we'll talk a little bit more about that in other contexts later. But I just want to make the point that that's a Trump administration era policy. And so even in the prior administration, there was this focus on we need to be collecting more and collecting more efficiently. So with that said, I'll turn it over to Joe to talk about state developments.
Yeah, thanks, Bob. Bob, I have one question for you on the slide that I went back to. I understand, and it's for clarification purposes, I understand there's been a lot of press about this high income initiative that has been ongoing for a couple of years and has received more emphasis lately. But you're not suggesting, are you, that it's only the high income taxpayers, specifically individuals, that are going to be impacted by all the recent hires, that is a corporate concern as well? Or could you touch on that?
Oh, for sure, Joe. That's correct. I mean, it's not The point I wanted to make there is that there is, even before the election and even before the new administration, there was definitely an emphasis on the IRS ought to be targeting audits at high net worth individuals. And we'll talk a little bit more about how our audits are targeted later, but in areas that are going to be productive and they're going to find lost revenue. That's separate and apart from this new emphasis on staffing up the IRS and increasing the volume of enforcement.
Hey, thanks, Bob. I thought that was the case, but I thought it important that just we underscore that. I'm going to spend a little time now on talking about some recent developments in the state side, and I'm not talking about recent developments in substantive developments. I want to spend time on giving you a sense for what we are seeing on the front lines and how these issues are impacting how you should prepare to defend against an audit and how your auditors themselves are behaving. So these are some of the points I want to go over. One, state and local again. Make sure you understand when you go into defending an audit, the state's respective financial strength position going into that audit, because more now, I would say in the last 5 to 7 years than any time in my career, that has become a real factor in how the audits play out. I'm gonna give you an example of that later on and actually take you through a real life case story or case study. But let me share with you that prior to COVID, there was certainly a number of states out there that were in dire financial straits. They weren't refunding state tax refunds. There were all sorts of issues with respect to potential bankruptcies. And some of those states are still in that position. And when COVID came on, there was a concern that those positions would get even worse. And as a result, to the extent work was being done by the auditors during that period, you saw a little of that play out in how aggressive auditors were. Some of those states since COVID and since the statistics have come in actually fared better by far than they thought they would. So they're in a little better financial strength, and those that were strong are certainly in better financial strength in some instances. But the point is, it's really important to get a sense for what state you're working in terms of what their financial strength is, because it does impact how and when or if you want to make a settlement, and just to make it go away. And I say that because I've seen 5 or 6 instances in the last 3 years alone where all it took us to resolve an audit was to make an offer of a lump sum payment, and it was done. And the truth of the matter is, it probably would have taken a lot more time and effort and resources on the taxpayers' end than what it cost us to settle the issue up front. A little bit of a shakedown, but nonetheless, I think overall it was the right economic move for our taxpayers. So I just wanted to make that point. Just be aware of that. Then, not unlike the federal side, there absolutely has been an increase in the number of state tax auditors, and certainly, I understand why many of the governors out there, if not all of them, have run at some point on the promise not to increase state taxes. And so that means not to increase state taxes in terms of putting new tax imposition laws on the books. That doesn't necessarily mean they won't increase the enforcement effort that goes on here. We had a Republican governor term before our current one, and he was very clear he's not going to increase taxes. On the other hand, I think 2 years in a row, he added 100 tax auditors on the state side so that enforcement increased. And in fact, increased the bottom line that way without adding a new tax statutorily. So just be aware of that. With the increase in state tax auditors, there is going to be an increase in audits. Unfortunately, the flip side of that is there's been a decrease in the relative audit experience. And after this slide, I'm going to turn over to our insider, Crystal, and she's going to tell you a little bit about what that means in terms of how it's impacted the training of the auditors, in prior years versus now, and other issues relating to that. But the decrease in relative audit experience has caused me to change the manner in which I defend audits. And we're going to get specifically into that, into the top 10 tips for handling that, along with some other slides here. We've also seen this passing judgment. That's not a technical term. That's my phrase. In the last 5-10 years, I've seen an absolute increase in an attempt by the various departments of revenues in a number of states, and an attempt by local municipalities in the property tax context, for those of you who are interested, to really demonize taxpayers who are just doing what they can do to minimize legally their tax exposure. And by passing judgment, I mean that they almost start off the audit with, well, you've taken these positions and it's a problem, and we think you're doing the wrong thing. And it becomes much more adversarial than it was in prior years. What that does for me is, if you know that someone's coming in and going to take the position that you are a bad actor to a certain extent, you're going to behave differently on the audit defense side. In my case, what that means many times is we make an extra effort to be timely in responses. We make an extra effort to make sure every single written communication has a response that we can live with, should that response ever become some sort of piece of evidence later on. If they say something that puts us in a bad light, we correct them right away. That is really important for obvious reasons, but for some specific reasons we'll get into in a bit. Passing the buck. Again, not a technical term by any means, but something I have seen a lot more recently, which is at the audit stage, and we'll talk about the various levels of appeal, but at the audit stage, more and more we are seeing an increase in the auditors just not weighing in on the specific legal issue involved, whether it be an R&D credit or an interpretation of various aspect of a provision that may not be entirely crystal clear as it applies to a given situation. What that does oftentimes is it requires you either to go to the supervisor and get assistance, and Chris will talk a little bit about that, or it requires you to take a different tactic with the auditor. Again, in my case study, I'm going to go over specifically how we kind of forced the auditor to take a position one way or the other, or say, I don't know, I'm not addressing it, so that we could move it on. And I'll talk to you about a couple different ways that played out. So I just wanted you to be aware of that trend recently as well, that they're just, that they're mainly focusing on a lot of factual issues that we've seen. In the tough legal issues, they don't even try to resolve. So you got to push them a little to position yourself for the next level of appeal. And we'll talk about that when we get into the case study. We're going to spend the next several minutes talking about the audits and appeals, general procedures, timelines, and other useful information. Keep the questions coming to the extent that you have them, and we'll try to incorporate those in our presentation. I'm going to spend a little time talking about just the general state tax audit process and appeals procedure, because as we go through the context, you'll understand when we talk about representation by your in-house controller, or by your third-party accountant, or by an attorney, depending on where you're in the process, you'll understand where we're talking about. All state tax audits start with an initial notice. We are coming to audit you, make yourself available, or we're going to do a desk audit. We want these sorts of records by such and such a date. And that'll come out in an initial written audit letter. I tell for our clients and for prospective clients and for referral sources, one thing that I've done over the 30 years I've been practicing is say, listen, The second you get that initial notice, send it to me. It'll cost you a cup of coffee. If that, I want to weigh in and help you understand what you're looking at in that initial notice, because the initial notices sometimes can be, hey, here, we're going to audit you and fill out this nexus questionnaire. That is a very dangerous initial notice. And that is one that is going to take a little more input from your outside accountant and or your counsel, so that you are not stepping in things for one tax that could impact you in another tax. And Crystal's going to talk about that type of situation in the economic nexus standard, which we are seeing all the time right now. So make sure when you get the initial notice, it goes to the right person, whether it's in-house general counsel or your accountant, or have someone that's not involved take a peek at that. Bob, did you want to weigh in on that from a federal side?
Yeah, I think that's right. I mean, the thing is, when you first get an audit notice, there are a number of things that, and it may very well be that your accountant or even your internal folks are perfectly capable of handling the bulk of the audit. But, understand that the audit process, if you don't like where it ends up, is going, the final avenue of dealing with it is litigation. I'm not saying they all get there, they don't. But you need to understand that that is a risk, and it always makes sense to talk to an attorney and discuss, sort of the risks and what you can do to position yourself to try and resolve things as simply as possible.
Thanks, Bob. So after the initial notice, or with the initial notice, you'll get some requests for information and some time frame in which to respond. I find it's helpful if in those requests for information, you keep an Excel spreadsheet or whatever app you use to keep the request for information lined up in terms of what was asked for, how you responded, when you responded. And I say that because Crystal will share a lot of her experience recently, where towards the end of an audit, we get a notice, a proposed audit notice, assessment notice that says, oh, okay, give us, you have 30 days to respond. And more so now than ever before, we get a lot of those. And, look at our proposed audit, and then the explanation sheet says, requested documentation not provided. And it's just simply wrong. It is just simply wrong. And I wish I could say that's happened once or twice. I can tell you that's not true. It's happened a dozen times in the last 2 years alone. So make sure that, in the past, I think we were all a little looser. I would be very, very detail oriented in tracking those requests for information. How you responded, when you responded, hyperlink it, have it in front of you so if push comes to shove, you can do it. There's another reason for that too. In the cases that do go to litigation that we handle, especially on the state side, in some of the states, one of the intro paragraphs to the briefs, if it gets that far, is always, listen, this taxpayer was not cooperative, or this taxpayer didn't give us all the information we requested. And what we have done to avoid that happened quite a bit. What we have done to avoid that recently is we hit them with a request for admissions where we use that Excel spreadsheet I talked about earlier and say, you asked for this and you were provided that. And so we eliminate that whole argument off the front end so they can't paint us as bad actors going in. So again, just a little tidbit for yourself. It's going to help keep you organized. It's also going to help on the back end if it goes to appeals and if it eventually goes to litigation. There are interviews. There's usually a request for a tour, especially if it's manufacturing, so they can understand the process. But that's true in other contexts as well. I'm not going to spend a lot of time on that. But when you do have someone who gives a tour, have your accountant or your internal person or your attorney prepare that individual for what the legal issues are. And of course, you're going to stop them on the tour, or your third-party counsel or accountant is going to stop the individual from responding to question if it's legal in nature. But you have to spend time so that they aren't out there bragging about a certain area and stepping in it on the tax side. So just one of the things that I would absolutely say is you got to invite whoever that person is the engineer in or whoever it is, and you've got to have that person be able to tell you back what the issues are that we have to be aware of on the tour. Then, a proposed report comes out. I mentioned it before. A final assessment comes out, and then there are all sorts of administrative appeals, many times within the very same Department of Revenue that came up with the assessment, which is not entirely the fairest tribunal to work with, and that'll be brought forth in the case study shortly. And then you go to the Tax Appeals Commission, the board, or the equivalent, and then finally the Higher Court of Appeals. So that's kind of the general time frame that is involved in all state tax appeals. I want to spend a little time now to provide you with some context through Crystal's experience of having worked within a Department of Revenue and then on the outside, and give you an insider's look in terms of what the auditors are being trained with then versus now, and how that may impact, how you respond to an audit. So, Crystal, welcome and take it away.
Thanks, Joe. So, like Joe said, I'm going to run through first what I experienced specifically in my training, and then we'll compare it to what I see happening now and the reasons why I'm seeing that. So my training in total with Wisconsin was a 1.5-year process before I even was able to go out and audit any business on my own. I even relocated down to Madison. It was daily classroom training. We went through every single industry in depth. We went through the various research tools, the statutes, the admin code, line by line in depth so we could understand it, and then went through various non-taxable and taxable situations and applied those laws behind it accordingly. The content was very intense. After we went through all the classroom training, we actually went out and did shadow audits for at least 6 months, where we were paired with seasoned or senior auditors, and we went out with them. We experienced hands-on the different industries, the different live interactions with the taxpayers. Just that live experience was so beneficial. So you could see what you might get into as various scenarios instead of just talking about them in the training. And then even that, when we were finally on our own and had our own caseload, our supervisors were still playing an important part in that continuing the training process. They many times would internally review our schedules, most times, before they could even be provided to the taxpayer. That was a requirement. So we would go out in the field, we would review all of the data, we'd put it into our schedules, but before that was released to the taxpayer, there was discussions with the supervisor as far as why things were listed. And many times the supervisor would say, no, that's really not taxable, and here's why. So you were still learning as you went, but it wasn't obvious to the taxpayer what was happening behind the scenes. It was obviously a very robust training process. I'm very happy to be at Husch Blackwell today, but I obviously really appreciate that training that I received as that foundation when I was with Wisconsin Department of Revenue. Looking back, obviously I don't always agree with how they're resolving certain issues now, but I certainly can understand the basis of the positions, which helps us then develop our argument as well. So that was the training I received. Now, I don't think that's the same training that's happening these days in many states currently. And I know that to be fact in many states. And then on the other side, I do see it in just dealing with the different auditors across the states as well. These auditors are coming across, they're clearly less experienced, they're less trained than I would have even thought they would be. And, just as a point, here's an example of a real life case that I was working on recently. So I was brought into the audit near the tail end of the audit to review the report, see if there was anything missed, if there's any additional things we could provide. And these audit reports had numerous items that were just statutorily not taxable. And they've never been taxable items. It was a black and white issue. It wasn't some of those gray ones where we do go back and forth. This was clearly something that should not have made it this far. It should have never even been taxable and handed to the taxpayer in the first place. But it was listed because there was no tax on the invoice. And that's how this auditor was trained, is if there was no tax on an invoice, put it on the schedule. So that specifically happened within this audit. Then there are also duplicate and even triplicate line items listed on this audit report, not to mention a vast misunderstanding of the industry that they were auditing. So what we ended up having to do was essentially back the entire process up to the beginning, start over with this auditor as far as walking them through what the actual industry is, what specifically is happening within this taxpayer's business, and then try to get that auditor to understand just the basics first, so we could get to our additional disagreements of why some of those gray items we didn't believe were taxable. But we had to back up and start that beginning process earlier. So there's definitely less training happening internally because, and I believe my sense is that that supervisory review isn't as happening, at least as frequently as it had been when I was within the state, because that supervisor would have never let that report get in the hands of the taxpayer, seeing all of those statutorily not taxable items, among all the duplicates and other things.
Yeah, Crystal, that's a really good point. I'm glad you ended with the fact that the supervisors aren't necessarily as hands-on as they were before, because there's another side to that coin. And looking at the list of who's with us today, I can tell many of you are experienced and perhaps even more senior and have dealt with a lot of audits and defensive audits in the past. And if you're like me, growing up, I was like, we got to be very careful about involving a supervisor, because then the auditor gets really defensive and starts taking positions and digging in. And we just got to be careful not to step on people's toes. Well, I'm not going to get into a big discussion on how the generations are different, okay? But I will, and I have 5 kids, and I'll tell you, I can see it in my own kids. I will tell you this. What I have seen lately, and Crystal, I want you to weigh in on this from the state side, is the auditors that are less experienced no longer have that sense. They have not felt, at least my take on it, that if you bring in an auditor or a supervisor, it's a bad thing. Many times they welcome the supervisor's input. So one of the tips that I list, I think it's number 8 at the end, I said, don't be afraid in the appropriate instance to bring in the supervisors, and that request can be joint with the auditor. And there's not the same, my experience has been, there's not the same type of potential drawback that there used to be. Thoughts on that?
Oh, I agree, Joe. When I was an auditor, it was a serious threat if somebody mentioned they were going to be calling my supervisor. Now, my supervisor would have known what the issues were because we'd been talking about them all along, but you still didn't want it to go to that level. You were supposed to be the one in charge as the auditor, getting it to the finalization point. Now, I think you're exactly right. And even on the other side, since, defending, I would initially caution even going up to that next supervisory level because of the pushback or the animosity that might come with it, for additional issues. So you really picked your battles as far as when you decide to go to that supervisor. Now, you're exactly right. I mean, involving the supervisor now isn't what it used to be. You can go to them and you almost need to involve them early on, where that never used to be the case.
Yeah, agreed. And so the takeaway from that is that you have to understand your auditor, right? If it's a more experienced auditor, they're probably not going to like that. If it's a less experienced auditor, that's one of the things you can flesh out when you're doing your initial discussions with the auditor when they sit down with you and talk about the scope of the audit, which I'm going to get into shortly. Bob, I'm going to turn over to you to talk a little bit about the federal tax audit process and appeals. So take it away.
Thanks, Joe. And I won't belabor some of these points because the overall process is very similar to the stateside process that Joe went into in quite a bit of detail. And also because when you get right down to it, you could take this outline, and I have before, give an entire presentation on the various steps and what you can do with the different steps. And this isn't that presentation. The one thing I do want to note on the federal side that is a little different is the IRS Office of Appeals, as opposed to the administrative appeals that you have on the state side. I don't want to oversell, your likelihood of success with appeals at IRS, except to say that they often do reject exam determinations and compromise. They have a separate chain of command, and they do look at cases independently, and we've had good success resolving a number of things at appeals. Frequently, we didn't get everything we wanted, but we got enough to live with. The only other point I will make is that when it comes to judicial review in federal tax audits, you actually get a choice. Once you receive a notice of deficiency, which is where the IRS says what their final determination of what they want to assess is, you can petition that to the U.S. tax court without paying. The tax court's a specialty court that only looks at tax cases. You can also pay and request a refund of the tax paid, and then take the case to district court. And there's advantages and drawbacks to each one of them, but it's just something to consider. And I don't think that in most states you necessarily get that option. It varies state to state, of course. But that said, I'm going to hand it back to Joe to talk a little bit about the audit process and appeals and how audits are selected.
Yeah, thanks, Bob. And a lot of this will apply. I'm speaking about, but a lot of it applies to the federal side too. Bob's going to weigh in the end and give an additional tidbit. But many times we're asked, "Hey, how was I selected? Right? How was my audit selected?" And from the state side, a lot of it is the state will determine a particular industry needs to be targeted. For example, 5 years ago or so, we saw a slew of audits on the construction industry. I mean, it was ridiculous how many audits were coming because the audits were fruitful for the State Department of Revenue. So that, if you're in a targeted industry, the chances are you're going to get selected and audited. And you can get that information on a state-by-state basis, depending on who you talk to. So if you ever need that information, let us know and we'll get it. Prior audits is another one. If you've been audited in the past and they have found money, they are coming back. And when I say found money, I'm talking about something substantial. Many instances when we go back in litigation, we will find in the Department of Revenue records, notes that say, good candidate for re-audit or not a good candidate for re-audit, depending on the prior audit. So if you've been audited in the past, you best prep to be audited in the future unless you were pretty clean and didn't give them an awful lot. Formulas and statistical modeling, sometimes just a number crunch exercise that flips you on the internal apps of the various states' departments of revenues. And sometimes there's questionnaire responses. You're all getting them if you're a remote seller or you represent remote sellers. Those questionnaires are becoming more and more difficult to respond to in a way that doesn't trigger some sort of follow-up, especially now that economic nexus is so prevalent across the sales tax side, in addition, of course, to the franchise and income tax side. And then you have third-party sources. And quite frankly, this is becoming more prevalent too. It seems to me, I get quite a few calls about, well, can't I turn in my competitors? Certainly you can turn in your competitors if you want to turn in your competitors. But I didn't used to always get those types of questions, at least in the number of times that was requested me. So there are quite a few third-party source audits that are coming in because of snitches or because the department has audited a purchaser and found your invoices with no tax on it. And if it's substantial, they'll set it aside and they'll come back after you specifically. Bob, you wanted to mention something on the federal side.
Yes, and I believe, Joe, that we refer to those as whistleblowers, not snitches.
I'm sorry, whistleblowers.
But yeah, I did want to mention too, especially on the federal side, and people definitely ask that question, how was I selected? And frequently when they're asking, it doesn't necessarily matter anymore. But, on the federal side, especially too, a certain percentage of audits, and I don't know what the number is, but are random, right? The federal government in particular, but I think this extends to the states to some extent. The IRS believes that part of their job is just ensuring tax compliance across the board. And one way they go about that is they just select a certain, number of returns depending on available resources for audit, take a look at them, see if there are any issues they can poke at. And so sometimes, and it's not on the slide because it's not something you can do to minimize your risk. but it's just luck of the draw. The next slide, I also just wanted to show this. Don't want to belabor the points on this either, except to say, this sort of deals with the various types of audits the IRS on the federal side conducts. On that left-hand bar chart there, field examination and correspondence examination are really what you might get and think you're being audited, right? The other things are, oh, hey, we noticed your information returns don't match your return. We think there's an error and you probably owe money or you're probably owed a refund. But if you look at that left-hand chart next to the right-hand chart, the two types of actual audits correspond to, almost 2/3 of what the IRS actually assesses in additional tax from people. So it's pretty significant. And, even though the IRS is always looking to better target audits, odds are pretty good that once there's an audit, they're going to find something. And it doesn't mean you're doing something wrong. Nobody's perfect, and there may be transactions that they view differently than you. So, all right, Joe, I think this is you.
Yeah, thanks, Bob. So we're going to go into a few practical tips for both federal and state tax audits, and I'll invite Bob to touch base on a couple of these points. But very simply, the second you get a notice, as I said before, you've got to involve your in-house people or the tax manager or your bookkeeper. I would suggest once you get a notice, you take it all the way up the chain of command, depending on what that notice is. Sometimes the general counsel is the right person to get involved. Again, depending on how your responses to whatever that initial notice is may impact other things going on. Involving an attorney, as I said, it's my practice. I tell all the people I deal with, whether it be new clients, existing clients, referral sources, that I will always look at that first letter. I would rather look at that first notice and provide guidance on that end. It saves a lot of work on the back end and hopefully puts a client in a better or a potential client in a better position than had they not talked to me. So, especially now with how adversarial things have gotten, I love to be involved. It may not be other than that. It may just be here. This is what it is. Just be aware of these issues. And if you need more help, call me back and we can talk. But this is where I see this going. So I would suggest you get someone involved. There's another reason that I want to talk about getting an attorney involved, or I want Bob to address. Bob, can you go into that a bit?
Yeah, and the other thing to consider is that I want to be clear that accountants and tax managers and bookkeepers can all do an excellent job preparing for an audit and defending an audit. But one thing to keep in mind is that you don't have attorney-client privilege with your accountant. And there is something called the tax preparer privilege, but that's federal only. And it only applies to preparation of returns. It doesn't apply to audits. And so one place that you need to consider this is theoretically, the IRS can discover your communications with your accountant. And there is a process whereby you can, engage counsel to represent you and advise you, and counsel in turn engages the accountant, and that can, in the right circumstances, it's not bulletproof by any means, and it has to be more than just a sort of window dressing, but the attorney-client privilege can extend that way. So it's just something to keep in mind, and also just keep in mind that if you're in an audit, that theoretically your communications with your accountant about the audit could be discovered, and keep that at the front of your mind as you're thinking about how to phrase things and how much you want to explore the weaknesses of your case in writing. So
thanks, Bob. That's right. And the last thing I just want to briefly touch base on is we talked about the various levels, right? And depending on where you are, there might be different evidentiary rules involved in terms of what you need to prove your case, right? And sometimes at the lower level, it's lower, and sometimes not. But certainly, please be aware, especially in the state and local tax side, that when you go to the next level of appeal from an audit, that you understand specifically what it is you're producing and what it is you're required to produce. I've been involved in a couple of cases where some states allow non-attorneys to present at a hearing, which is fine because they do a very good job. Unfortunately, some states have very strict evidentiary rules that you don't get to supplement you don't get to supplement the record if you appeal in a subsequent forum. So you just got to be aware of those types of rules going forward in the course of an audit defense so that you are best positioned. I want to spend some time, we're touching on a number of these. I want to spend a little time on what you can do to put yourself in the position now for a letter that comes, right? My recommendation is everyone should have an audit procedure plan, a tax audit procedure plan. They should have the current organization chart available. They should be able to identify key personnel within the chart. You should have, in front of you a document, the documentation of your retention, your document retention policy in front of you, so that you know what it is that you can provide if asked for by an auditor, and that you know that at the time you're asked. The better you can show you are prepared, the more respect you will garner and be able to leverage that later. You should have, if a state comes and gives you notice, you should have guidelines on that state's applicable statute of limitations, whether it's addressing or introducing new refund claims potentially in the course of the audit, or just general statute of limitations for assessments when they have to act so that you can be prepared accordingly. And then you should have their guidelines. You should understand the guidelines regarding whatever modeling or sampling or other tools they use to make the assessment. For example, I know for a fact that some states in the sales and use tax context have guidelines on statistical and non-statistical sampling. I'd want to know that before I start defending on audit as to what that state's guidelines are so that I can respond accordingly and direct the auditor into the appropriate type of audit, if at all I can. A couple other things, you want to be able to identify the contact people that will be handling the audit. You want to review any prior audits. That marries up with my comment earlier about a prior audits are one way you get audited again in the future. And then this is something that I've noticed is missed more often than not. And that is, you all have to be aware of the current developments in the law since the last time you were audited, or at least since the last 5 years. Now, sometimes you can get that from an industry publication or trade group, whatever the case may be, but that's absolutely critical to know before you go into an audit defense. What are some of the things you're going to do at the initial meeting or conference? Be personable and professional. Keep written record of all requests. Be timely. If I can, now, given what's going on, I try not to ask for extensions to respond. I would rather be in a position where you timely respond and then later on be able to represent that every time something was asked for, you timely responded to it and gave an answer. Now, I know that that's not always doable, but to the extent it is, I would try to do that. Avoid commitments or refusals. I love the avoid refusal. You try to rework the question if you're finding it hard not to refuse. Avoid commitments. You don't want to say, I'm going to get you this in 2 weeks, and then find out someone's on vacation for the next 2 weeks and not be able to get that. That'll put you in the quote bad actor situation. So we want to avoid that. Control the flow of the information. Whoever's handling the audit has to handle the audit. Be the single point of contact from which or through which all information flows. What will you do at the closing conference? You're going to identify key areas of disagreement, key areas of agreement. You're going to seek confirmation of cooperation. What I mean by that is, it'd be awfully nice to be able to write an email to say, hey, just want to say thank you for your time. in the audit, while we disagree on a number of issues, we found it helpful, to having cooperated with you and provided you all the relevant information. Again, that's just to prepare you for future appeals so they cannot argue that you were not compliant. Review billing process, appeal deadlines, and procedures. Hey, don't miss a deadline, obviously, and you got to know those when you go. Bob, spend a little time on federal tax audit trends, and then I'm going to turn it to Crystal, and then I'll finish up with the top 10. So you don't have to get into detail on either the federal tax or the state tax trends. If you just kind of want to list them, that'd be great.
Sure. And we've got those listed in the slides, which are available to download. This is substantive areas of enforcement that the IRS is especially focusing on. I don't think there's too much that you need to know about these other than you're going to have a fairly good idea if any of these applies to you or not. Any of these, if you were to Google, for example, financial services entities and IRS enforcement, you could come up with the IRS's own publication about what they're doing on these issues. So also wanted to briefly touch on procedural and practical issues with the IRS. I think the one thing I want to note is in dealing with the IRS in particular, you need to make all of your points up front. Joe made the comment about evidentiary rules and what you can bring up at the next level. In IRS, you can bring up things that you didn't bring up in audit to appeals, but when you do that, appeals turns around and sends the case right back to audit to take a look at the issue. And it results in, audits can stretch on 4 or 5 years as exam, reviews this new issue that they didn't see before, and then it goes back to appeals and you schedule a hearing. And it just adds time and expense to a process that can be more streamlined than it has to be. So Joe, on the state tax audit trends, did you want to cover that?
Yeah, Crystal, you want to lead this discussion, and again, maybe just take us through them very quickly.
I'll go really quickly. And if there's any additional questions or more detailed, they can chime in or always contact us as well. So the first one, economic nexus. I'm sure most people know, if not everybody, about Wayfair. The biggest point there is watch for both, not just sales tax economic nexus, but the income and franchise tax economic nexus, which was pre-Wayfair in many states. So make sure you as a business understand when that might have started or where your risks are in those various states. The real versus personal property, I'll let Joe touch on if he has a minute there after this slide for a specific case, but it's just an ongoing dispute across many industries, across many states, primarily in the construction area with contractors. Software as a service, we've been seeing a number of states that they're trying to tax it one way or another, essentially. You really have to know what you're dealing with. Is it truly software as a service? Is it something that's not taxable? Or in those states that don't tax it, they try to tax it as telecom or some other taxable component. So just really watch that. That's kind of a hot issue right now. Manufacturers, as always, more states are challenging the overall classification if some of these are even manufacturers. And then they're really honing in on that exclusively and directly exemption clauses. So be aware of that. Make sure what you're purchasing really falls under those exemptions. For use tax, like anything, make sure you're paying it. Make sure if you're not paying it, you understand why. Just to reiterate, as Joe said earlier, document everything at the time of purchase, not at the time of audit. Do yourself a favor, work it into your daily business practice as far as something comes in the door, you're buying a fixed asset, we're not paying tax, it's not taxable. Why? Write it down now. You've already made that determination instead of having to go backwards and recreate the wheel. And then for utilities, real quick, in my prior life, I ran my own business that conducted utility studies for the manufacturing industry. The states used to be a little more reasonable as far as what they would allow in this area. They're highly scrutinizing this as well. You have to have very specific documentation to support those exemptions you're taking in the utility area. We're able to still do those. I do those within Husch Blackwell as well to support that, but it can go one extreme or the other. There's been a specific audit where there was no doubt they're a manufacturer. The state said, you don't have proof, we're denying it entirely until you can provide some sort of support. real quick success story to kind of wrap this up. We provided that support. We did the study, provided the support. We actually came in higher than the client was taking for the exemption. So the state ended up having to give a refund in that situation. So win for us, win for the client, and up to R&D credits with you, Joe.
Yeah, thanks, Crystal. And we have a few minutes left, and so just hang with us, and we'll get through it all. I do want to say, with respect to along the lines of the utility study, the R&D credit issue has also reared its ugly head in the context of states are really frowning upon the retrospective report that is developed. Some states have gone so far as to issue some sort of guidance that they won't accept them. Whether the department accepts them or not, they are acceptable evidence later on. So just keep that in mind. We have a number of these cases ongoing right now. And if you have questions on where the states are going with the R&D credits and exemptions, our tax team wrote an article for the Journal of State Taxation in the spring 2021 issue on these very issues. If you want, I can email those to you, or perhaps we'll just post it and you can download it that way. That's what we'll do, so anyone can access it going forward. So with that, I'm going to talk about the case study as we wrap up, and then we have 2 slides left. And this really is kind of the 10 commandments. It brings everything that we've talked about into these last 10 tips. So let's take it away. Set the ground rules from the beginning. Whether you're federal or state, know what they're looking at. Tell them, access points, point of contact, who's going to provide what information and by when. Set all those ground rules at the beginning and try to stay committed to those rules all the way through. That helps on the back end, whether the appeal level or the subsequent court level. At the beginning, request the contact information of both the auditor or the supervisor so that you have that in the event you want to reach out to the supervisor and it doesn't become somewhat uncomfortable by asking for it later. Respond to all requests narrowly and in writing. I couldn't emphasize this more. Having the response in writing is absolutely critical, in my opinion, in this day and age. Seek confirmation in writing of cooperation and document production. Again, that's to put you in a position where they cannot claim that you've been a bad actor. And I wouldn't have said that 10 years ago, but it's showing up everywhere. I mean, every case that Crystal's involved in now, that I'm involved in, at some point, one of the auditors or the appellate agents are saying, oh, no, you were asked for information and you didn't timely provide it, or you didn't cooperate. So getting that on the front end will avoid that. That'll take that argument away from them. And to me, it's very critical. Request from auditor clarification of the position underlying adjustment and support authority for that position. I told you earlier that the auditors are, in my opinion, shirking their responsibility by not providing an answer as to why something is legally taxable. But what we have been doing is we have been writing our position as to why it isn't and asking for a response in writing. Oftentimes we get, oh, we're not going to address that. Hey, that's great. At the appeal level, I can use that. But get them to take a position in writing, either why it is it's taxable or why they won't respond to it. It's helpful later on. Either way. The last 5, attempt to address all issues while the auditor is on the premises. To the extent the auditor is on premises and it's not a desk audit, you're going to have much more flexibility with the auditor if the auditor doesn't have to go back and get approval elsewhere, right? So try to address whatever issues can be addressed. Review, challenge every adjustment. That doesn't mean you're going to appeal every adjustment, but don't assume what the department tells you is right. More and more now, when we get involved some way through the audit, sometime through the audit, someone will say, well, the department says it's taxable and they've given me this position or they've given me this ruling. And I will say, well, yeah, on its face, it could be, but look at the differences between your situation and this situation. You have to assume that every gray area, the department auditor or the IRS auditor, whomever, is going to take the position that any gray area is in fact taxable. So you don't want to just necessarily take their word for it. Again, don't be afraid of requesting a supervisor's involvement for all the reasons we said. Be professional, timely, and keep the audit moving. Don't let audits die. And I say that, although in the past that used to be a strategy, it certainly isn't now with the interest rates that are out there. And it certainly isn't now with the turnover rates that are out there and audit personnel. We've had audits that have lasted 2 years and we've had 3 different auditors. We've done the work 3 different times. So keep the audit moving unless there are other reasons why you don't want to do that. And then document. Get it all in writing now so that we don't have to recreate it later. You don't have to recreate it later, and it's done. With that, I think we can wrap up. I just want to say thank you very much for joining us on this presentation. I hope you'll take the time to answer our survey. And if you have any questions for any of the panelists or the panel as a whole, please feel free to reach out to us and we'll do so. I'll work with our people in the back end to make sure that if you want a copy of that JST article on tax credits, we get that to you. So just let us know in that regard. And with that, I will sign off on behalf of Bob, Crystal, and myself. Have a great day.